the 15th of January 2020. Wednesday would be deal signing day between China and the US. This day has been awaited with anticipation over many months as traders pondered whether the two superpowers would ever reach an agreement. Phase 1 has been negotiated and agreed upon, and next up will be Phase 2. This is where we will see an additional rollback of tariffs, according to US Treasury Secretary Mnuchin. The Chinese Trade Minister Liu He added that the US and China will work together to follow through on their commitments. Can't you just feel the love? So, other than signing the aforementioned trade agreement, what else did Wednesday have in store? Well, the UK would release a particularly weak set of inflation figures, which saw sterling weaken against the dollar from 130.40 to a low of 129.85, and also against the euro from 0.8537 to 0.8577. Keeping in mind the weekend comments from several MPC members about weak data and rate cuts, it would seem there will be an increasing pressure for the UK to ease rates soon. Elsewhere, the Swiss franc continued to strengthen, strengthening to 107.43 against the euro. Not that the SNB will really care, but yesterday's revelation that Switzerland has been added to the US FX manipulation watch list has traders wondering how long the SNB will continue to prevent the Swiss from further strengthening. In the US, weak PPI data saw dollar yen drift down to 109.80 and euro dollar up to 111.50. This on the back of a weak CPI reading yesterday. Equity futures would be hit after weak holiday earnings from Target, with traders concerned this could be a precursor to a poor retail sales number on Thursday. And we all also had the resignation of the entire Russian government, although this was largely symbolic as President Putin looked to push through a series of reforms. US equities opened in positive territory, despite the futures indicating quite the opposite. The Dow Jones will once again head above 29,000, up 65 points in early trading. Yen crosses will be the main beneficiary of the strength in equity markets, with euro yen moving back to 122.60 as dollar yen held at the 109.80 level and pushed back towards 110. As the trade deal is signed, the Dow Jones is up 160 points, although FX is a little more reluctant to get sucked into the euphoria, with dollar yen now barely registering a pulse. Euro yen climbs to a high of 122.71, a few pips shy of Monday's high. However, as we head into the Wall Street close, stocks begin to get back some of their earlier gains, but the Dow Jones does close above the 29,000 level for the first time, up 90 points in the day. The S&P and Nasdaq both eke out marginal gains. Euro yen, however, drops back to 122.5 and dollar yen to 108.88 as it fails to break a 22-point range over the past 24 hours. Euro ends the day at 111.50 and sterling against the dollar at 130.30. I'm going to keep it real simple today from a technical perspective. We've got a 30-minute dollar yen chart. As I pointed out a week or so ago, we had some very strong resistance here around 109.70 or just above 109.70. As you can see, we did break, obviously, and we've been up to a high just above 110.20. But as you can see here, we've sort of lost momentum when we've got this sort of tight gathering of candles, if you like, on the chart, which indicates we've lost momentum, and also we've been trading in quite tight ranges. Just need to be a little bit wary. Obviously, if we do fall back below the 109.70 area, we might be in for a fairly sharp drop below there. Just something to keep in mind as we go forward, especially if there is a specific negative catalyst of some variety, maybe some events in the Middle East or otherwise. So just keep your eyes on that going forward. And with that, I will wish you all a pleasant day and look forward to speaking to you tomorrow. Cheers.